Hello friends, today we are going to talk about an important topic. Over the last few years, you might have seen the healthcare costs have gone up significantly. If you take an intensive care unit cost per day, it ranges anywhere between 15,000 to 50,000 per day, and you might have even heard stories of it going up till 1 lakh per day. If you look at heart bypass surgery, it costs anywhere between 2 lakh to 5 lakh depending on which city you are getting it done and which hospital you are getting it done. So, in this scenario of rising healthcare costs, how do we manage this burden on an individual? Yes, health insurance is the answer. Health insurance is mandatory for everyone. Every citizen should have this health insurance product. You can be poor, you can be a middle class, you can be rich. It is immaterial. You should have a health insurance either through government or you have to purchase it privately or you should have it through your employer. In this video, we are going to talk about the 10 key points that you need to understand about health insurance so that you can make the right choice, so that you can purchase the right product. If you take a mobile phone, it ranges from say 1000 rupees till 2 lakh with various features. You can't buy any product. So depending on your budget and depending on your need, you will choose the right mobile phone, right? Similarly, there is no such thing as best health insurance product. You will have to choose the right product for you and your family. Now, how are you going to define your needs? What do you mean by your and your family's healthcare needs or requirements? You will have to take a piece of paper, write down these 4 questions and write answers to these. Number one, how big is your family and who all in your family need insurance cover? Number two, what is the age of each of the family members? Do they have any pre-existing illnesses like diabetes or hypertension or hypothyroidism? Number three, how much of health insurance cover do you need? Do you already have any health insurance through an employer or through government? Number four, what is your earnings or what is your savings? How much of premium you can pay per month? Once you write answers for these 4 questions, that defines your needs. With your needs, now let's look at each of these 10 points and see how you can choose the right health insurance product for yourself. Number one, type. Here there are two parts to it. Number one is how big is your family, who all need cover. Depending on that, either you can choose an individual health insurance plan or you can choose a family floater plan. If you have senior citizen parents or parents who do not have a health cover through their employer, you need to take a family floater plus a senior citizen individual or a floater depending on your need. The second part is what type of cover, in terms of that is whether do they have any pre-existing illnesses, are there any critical illnesses. Accordingly, we'll have to choose the right product. So if you look at the various types, you can see either a comprehensive health insurance, a regular health insurance, or a critical illness plan. In a comprehensive health insurance plan, usually pre and post hospitalization, day care, health checks, ambulance charges, all these are covered. Whereas the regular health insurance will only have a hospitalization covered. Number two, depending on the pre-existing illness, every product comes with a waiting period. So you need to choose the right waiting period according to the pre-existing illness, the stage in which the illness is, and your need. If you look at the third part, there is a critical illness plan that specifically caters to that particular type of illness. It not only covers hospitalization, in some cases it also covers deaths, the rehabilitation costs, etc. So these two are generally annual plans and this is generally a long-term plan. So now I guess you might have understood what type of insurance is required for your family. Number two, what should be the coverage? So it's not a very simple answer like I need a 10 lakh coverage or a 20 lakh coverage. So there are different components to it. Number one, what should be the total coverage? A total coverage will be defined by number one, your need and where you are living. That would define the healthcare costs. So if you are living in a metro, you may have to take a higher coverage. Whereas if you are living in a tier 2 city, as the healthcare cost may be slightly lesser, you can go for a slightly lower coverage. A general thumb rule is you can go up to 6x to 10x of your yearly salary as a healthcare coverage. Number two, while you have a total coverage of say 10 lakh or 20 lakh, how much ever you buy, there are some sublimits. For instance, if you are getting admitted in a room, some policies do not cover the entire room cost. Some policy will define a limit, say for instance say rupees 4,000 per day for a room, beyond which you'll have to pay from your own pocket. Some policies say that it is 1% of your total cover, or some policies let you take a single private room irrespective of the cost. So you should be very careful in reading through all these sublimits and choose the right product. So it is advisable to take a product with least sublimits, or look at the sublimits such as 4,000 or 2,000 or 3,000 and reject such policies outright. The most important sublimit that you need to look at is what is the sublimit on intensive care unit or intensive medical care unit costs. So, in some policies, I've read the per day cost that can be given to an IMC or an ICU charges is around 15,000, which is peanut considering the intensive care unit charges per day. So, you need to be extremely careful in identifying and reading through the sublimits, or you need to speak to the agent to understand each and every sublimit in detail, and you need to choose the right policy. Number third, as I had indicated earlier, what are the additional features that are covered? Do you need a pre and post hospitalization? Do you need a daycare procedure that needs to be covered? Do you need physiotherapy? Accordingly, you will have to choose the coverage for your insurance. Number three, this is one of the most important feature, cashless reimbursement. What is a cashless reimbursement? Let's understand that. Let's take two examples. Number one, say if you have a hospital expense, say that costs around say 4 lakh. What happens in a cashless reimbursement process is that the hospital directly gets the credit from the insurance company. You don't have to pay anything. Whereas in a cash reimbursement procedure, you'll have to pay this 4 lakh amount from your pocket, and then you'll have to get the reimbursement from the insurance company. So this is a significant burden. First, you'll have to pay from your own pocket. For that, you'll have to have your savings, or you'll have to borrow money, and you have to pay, and you have to get it reimbursed, and that is a very big process. So generally, we should go with a policy that has very good cashless reimbursement process in majority of the hospitals in your city. So what you need to do is you'll have to look at the total hospital network. Number two, in your city, look at are the important hospitals, or your favorite or the preferred hospitals are covered, and then you need to choose the insurance product. Number four, copay insurance type. What do we mean by copay insurance? Let's take a same example. Let's say you have a hospital expense of say 4 lakh. In policies with copay, you will have to pay part of the money. So that is of this 4 lakh, you'll have to pay 15 to 20%, which is around 80,000, and the remaining will be paid by the health insurance company. So generally, it is advisable to go with a policy that doesn't have a copayment feature. You'll also have to look at the premium accordingly. Number five, waiting period for a pre-existing illness. As I had indicated earlier, majority of the senior citizens do have existing illnesses. If you buy any policy, all those illnesses will not be covered from day one. Let's look at an example. Let's say one person has a diabetes, okay, and he has been having that for the last 4 years. Let's say he takes an insurance policy of say 10 lakhs cover on 1st of Jan 2020. On 1st Jan, he will not be covered for any ailments related to diabetes. If the waiting period is 3 years, he will be covered for diabetes related ailments only from 1st of Jan 2023. So there is a waiting period of 3 years. So it's generally advisable to choose an insurance product that has the least amount of waiting period. Number six, restoration benefit. Let's look at the same example. Let's say someone has a 10 lakh policy cover, and let's say the hospital expense in one particular year is say 4 lakh. What happens in a restoration benefit is that the company restores whatever has been spent. Say if you spend 4 lakhs and 4 lakhs has been deducted from your cover, remaining would be 6 lakhs, right? As soon as it is deducted, the insurance company restores that 4 lakhs and reinstates the total cover to 10 lakhs. So generally it is advisable to take a health insurance product that has the restoration benefit. Number seven, no claims bonus. Insurance companies reward your healthier lifestyle. That is, if you don't, have any claims in any particular year or 2 years, insurance company generally rewards this. How does it reward? Let's take this example. Let's say someone takes a policy of say 10 lakhs, spending 36,000 as a premium. Let's say there are no claims and reimbursement made in 1 or 2 years. How the insurance company rewards is that at the time of renewal of the next policy, or in after 2 years, Either it provides a higher policy cover for a same premium, or it increases or it reduces the premium for the same level of cover. So generally, it is advisable to look at the no claim bonus levels and features of your policy and choose the most appropriate one. Number 8, exclusions. This is one of the most important aspects that you need to read in your insurance policy terms and conditions. Many of the policies do not cover dental procedure, outpatient consultation, health checkup, pre-existing illnesses. Some of the diseases like Parkinson's, Alzheimer's, congenital heart diseases, HIV, AIDS, and chemotherapy are not covered. So, according to your needs, you need to choose the exclusions very carefully. You need to ensure that the product covers your requirements. Number 9. So far we have been looking at the various policy features. Now the ninth point and the 10th point is regarding the performance of the insurer. This is claim settlement ratio. What do we mean by claim settlement ratio? Let's say an insurance company gets 100 claims in a year and it approves 85 claims in the same year. What does it mean? It means that this company has a higher probability of approving, which is good, generally good for the customer. So we need to choose insurance company or an insurance that has a very high claim settlement ratio. So the advisable range is generally above 75% till 100%. So this information you can find it from the IRDA website, or you can just Google it and you can get the claim settlement ratio of each of these insurers. Do not go for insurers with lower claim settlement ratio. What it means is that the review process is stringent and in some cases it may be unreasonable. So generally it's good to avoid the insurers who has lower claim settlement ratio. Number 10, incurred claims ratio. What do we mean by that? Let's say an insurance company collects a net premium of 100 crore in a year, and we need to look at how much of claims have been paid out. Let's say in out of 100 crore, if the insurance company pays out 70 crores worth of claim, then the incurred claims ratio is 70%. So how do we decide on this piece? So what we need to look at is we should generally avoid the insurers with very low claims being given. Say for instance, if an insurer gives out only say 50 crore, it means that it's only 50%. ICR is only 50%. We should avoid these insurers. At the same time, we should be very cautious of insurers who has more than 100% of ICR, which means the insurer is running in a loss. Where do we get this information? This also you can get it from IRDA website, Insurance Regulatory Authority and Development, Insurance Regulatory and Development Authority of India, and you can Google it and you can get these information. Okay, I hope you would have understood various things about the insurance. Good luck in buying a good insurance product for you and your family. If you like this video, please give us a thumbs up. If you find it really useful, please share it with your friends and family. And don't forget to subscribe to our channel. Thanks for watching.